Cipher Mining closed Tuesday modestly lower, down just 6 cents or about 0.5% at $12.59 per share. That may not sound like much, but it's interesting because the stock spent most of the session in the red after a huge 10% rally on Monday. Was today simply profit-taking after a big move, or is it a sign of something deeper? And what does it mean for the week ahead? Let's start with what we actually know. As of today, there's no major new company announcement, no new regulatory filing, and no sudden change in fundamentals. The last big news remains the same: Google's partnership with Cipher via Fluidstack to deliver a massive AI hosting agreement and Google's warrants for roughly a 5.4% equity stake in the company. That's still the headline catalyst anchoring the narrative. On the financing side, Cipher recently priced an upsized $1.1 billion zero-coupon convertible note offering. Operationally, the company mined 241 BTC in August, sold 42, and held 1,414 BTC in treasury. The Black Pearl facility continues to exceed hash rate guidance. All of those factors remain in place. So if nothing new has broken, why did the stock drift lower today? In all likelihood, we're seeing classic profit-taking and digestion after a very sharp rebound. Monday's 10% move was the biggest single-day gain since the Google stake announcement. It came after a bruising week where the stock dropped nearly 18% on Thursday and slid another 1.4% on Friday. After a run like that, it's normal for momentum traders to cash in. Some of Monday's buyers may have been short-term players looking for a quick bounce. Once they get their gains, they exit, putting pressure on the price. Another factor is the lingering overhang from the warrant and convertible note structure. Even though the Google deal is a powerful long-term catalyst, it's complex. Google isn't handing Cipher $3 billion upfront. Instead, Google is backstopping $1.4 billion of Fluidstack's lease obligations at Black Pearl and receiving warrants to buy about 5.4% of Cipher's equity. That creates future dilution if and when the warrants are exercised. The convertibles add another layer of potential dilution. These aren't negatives per se, they're how Cipher funds its expansion, but they do make some investors cautious, especially after a big run. That caution can translate into selling pressure on any day without fresh news. We also have to keep in mind the broader context. Cipher remains a high beta, narrative-driven stock. It trades as much on sentiment as on fundamentals. When Bitcoin and risk assets are firm, it gets a tailwind. When traders are nervous or profit-taking dominates, it can slide. The Federal Reserve's rate cuts are supportive for growth assets, but volatility in crypto or macro headlines can still shake out weak hands. So, today's 0.5% dip looks less like a rejection of the Google partnership and more like a breather after Monday's sprint. That's actually healthy. In strong uptrends, you want to see the market pause, consolidate, and absorb gains before the next move higher. Now let's zoom out and remind ourselves of the core narrative, because that's what gives context to these daily moves. Cipher Mining started life as a straightforward Bitcoin miner. Over time, it's built a reputation for efficiency, scale, and operational excellence. Black Pearl is a flagship facility with exceptional power economics and hash rate performance. In August, Cipher mined 241 BTC and held over 1,400 BTC in treasury, showing that the core business is solid and profitable. What's changed is that Cipher is no longer just a miner. The Google plus Fluidstack deal transforms it into a hybrid infrastructure play at the intersection of crypto and AI. A 10-year, $3 billion high-performance computing hosting agreement at Black Pearl, backed by Google, is a huge validation of that model. Google isn't just a customer. Through the warrants, it's becoming a stakeholder. This is the kind of alignment that can create long-term value for both sides. Yes, the warrant structure means future dilution. But it also means Google only benefits if Cipher succeeds and the stock price rises. That's a powerful incentive alignment. It's very different from a private equity investor demanding a quick return. This is a technology giant tying its upside to Cipher's execution. For long-term investors, that's bullish. The convertible notes are similar. They provide the capital to build out Black Pearl's AI hosting capacity, but they increase complexity. If Cipher can grow into that capital structure by delivering high-margin AI hosting revenue on top of its Bitcoin mining base, the dilution will be more than offset by higher earnings and a higher valuation multiple. All of this sets up a fascinating tug-of-war in the stock. On one side you have a powerful narrative, a marquee partner, supportive macro tailwinds, and strong fundamentals. On the other you have complex financing, execution risk, and a volatile trader base. That's why the chart has looked like a roller coaster. Big rallies, big drops, and big rebounds. So what should investors and traders watch now? First, key support and resistance levels. After Monday's bounce, the stock sits at $12.59. The $11 to $12 zone is an important support area. If it holds, the market may be building a base for another leg up. Resistance sits near $14 to $15, where sellers stepped in last week. A sustained move above $14 on strong volume would signal that confidence is returning. Second, look for new filings or disclosures. A Schedule 13D from Google clarifying its stake, or an 8K with more details on the hosting deal, could reignite interest. Updates on AI hosting build-out milestones at Black Pearl would also be positive catalysts. Third, monitor Bitcoin and the broader crypto market. Stability at current levels supports Cipher's mining profitability. A sharp drop in BTC would pressure all miners, while a rally could turbocharge sentiment. And finally, keep an eye on volume and short interest. JP Morgan recently flagged Cipher as one of 3 names with the ingredients for a potential short squeeze due to high retail flows and significant short interest. If buying pressure returns and shorts cover, the stock could move sharply higher again. For a video angle, you could frame it like this: CIFR modestly dips after big rally. Is this recalibration or reversal? Start by recapping Monday's big gain, then today's small dip. Explain that there's no fresh bad news, just profit-taking and lingering caution about the warrant and convertible structure. Remind viewers of the Google deal and why it's a game-changer for Cipher. Then lay out what to watch next: support levels, filings, AI hosting milestones, and Bitcoin's trajectory. Finish with a balanced but optimistic takeaway: the volatility is real, but the opportunity remains compelling if the company executes. The message you want to leave your audience with is that Tuesday's modest decline is not a breakdown. It's a normal part of how high beta, narrative stocks trade. The Google partnership and AI hosting pivot are still intact. The fundamentals are still solid. The macro backdrop is supportive. Volatility is the price you pay for growth, and for investors who believe in the thesis, dips like this can be opportunities rather than warning signs. To sum it up, Cipher Mining is in the middle of a dramatic transition. It's evolving from a pure Bitcoin miner into a hybrid infrastructure player with one of the world's biggest tech companies as both a client and a stakeholder. That's a unique position in the market. The stock's violent swings reflect the market's attempt to price that transition. After a week of intense selling, Monday's bounce and Tuesday's modest dip suggest the market is stabilizing and digesting the news. If Cipher executes on its vision, the long-term potential is enormous, and the current volatility will just be a footnote on the chart.